Friday, August 15th, market analysis, Stan Ehrlich. Good afternoon, 1:40 California time, and the end of the week. Stock market indexes have had very small, very mild so far, overbought conditions and a bit of a dip starting, which could develop into something a lot more, but no zip pop bang to it. Usually it's not quite like this, so a little bit more of a dip, and then there's the very potential of new highs for the trend. I can't isolate any kind of a sell signal or say enough bearish things because they're not working. And even the spider attacked previous highs this week, Wednesday, and slipped back down. But there was no outside trading range or bearish engulfing. And it's not even quite overbought, but pretty close. And yeah, sure, something could develop, but I really need to close below 619 period to get intermediate to longer term bearish. That's the first significant support level. But since I am looking for the beginning of something big, that means into the October low, and I'll have in the next couple of weeks or so a special report available. All you have to do is ask, and that is emailing info@ersignals.com, info@ersignals.com, and I'll send you the report. And you'll even see parts of it probably in the next couple, 3-4 weeks. Well, until October. Okay. QQQ. Overbought, dribbling back down slightly. No signals, just a slight overbought condition. This would be one of the mildest or less significant tops if it develops into something like that, and I can't say it will. This looks like it'll just slip a little bit more. Even today's low could be the low. But I don't know, maybe down to 565, 80-ish. And then the next one is pretty good at 551. But if that gives way below 551, we kind of have to shift gears, intermediate to longer term again. Next. And I could, by the way, in the next few days, get a bearish engulfing red sell signal if we have an outside down day, because we were overbought a couple of days ago. Now, here's the little 5-minute chart dribbling off in the QQQ. And we also just dribbled off the NASDAQ. Not much, no significant dip. Big deal so far. And the NASDAQ 5-minute chart. Just can't justify anything. Next. YM did make a new high for the trend again, but this is a very mild new high, like it did back a couple of weeks ago when it dropped off sharply for, about a week. So could it do it again? Sure. Maybe not quite as sharply. But the first support level is where it bounced off of before at 44,477. I'm sorry, 43,477. And then a bit underneath that as well. We never did come all that close to historical highs made last fall, November. So that's the longer term weakness point of view in the Dow. Next chart, the Dow 5-minute chart. Nothing yet. And Russell, kind of like the Dow, but it did make new highs, pull back to a little bit of support, and the low of yesterday and the day before that aren't much lower. They're holding fairly well. Today's close is a little bit lower than yesterday, which was a down day also. There's support under the market. Maybe we'll get down to 21.96 and then slip to the next level, 21.47. We'll see if that holds. That could be very important. I'd give that more importance. And that was the low that was made on the beginning of the month, August 1st, Friday. Next chart. No big deal. All right, let's go to bonds. The old head and shoulder bottom has failed, and it did so a little sloppily, but nevertheless, it dropped below, went back up above, came back below, and now decisively, new low again, new low close for the last couple of weeks. Further distance below the neckline, which I stopped drawing at this point in time, because that was the original breakout level and date. And it held for a bit and then crunch. So how low can she go? Oh, I suppose pretty easily 1220, and back to where it bottomed out before, where the old, it's no good anymore, head and shoulder formed. It was okay for a few days. That was it. Too bad. This implies that rates aren't, going to do quite what people think they're going to do at this particular point, but we'll see. 10-year notes also starting to eat into the support area they already bounced off of once before. So this is a new low and a new low close to the move down. Not at all oversold. Could easily slip some more. We got crude oil, a new low close in a support area, but today's low does bounce off of the same low of Wednesday in the support area, but no strong close. Too bad. Though I don't make that much of it yet, the fact that the lows are the same on Wednesday and today, give or take a few ticks. Down we go. It did get a little oversold, but could slop off into another set of new lows easily enough. I just don't see any reason to get bullish. Next. Same kind of thing in natural gas, which is doing great with a head and shoulder top formation, which did break out back here on June 25th, which I did talk about weeks before it broke out to the down, and had a bearish engulfing ER sell signal perfectly on the last shoulder high to the day. All right. Bounce maybe a little. There's a resistance up at 3.187. That looks good. And then new lows, if not sooner. Next. Nothing's new here. Heating oil looks poor. Close to oversold. Could drop in a new low ground. Maybe one sharp break all of a sudden could get it down to support at 2.10. Then it would be oversold, that's for sure. Especially if it happened in the next couple, 3-4 days or so. Next, and I'm looking for lower levels. Gold did have a bearish engulfing, did close a tiny bit lower today, nothing to speak of. Did not yet make a lower low on a closing basis below yesterday's signal low day. The bearish engulfing red. This is, in my opinion, going to cause a downside breakout of this significant size trading range, which has its roots really back all the way to April 2nd. 1, 2, 3, 4 months plus. And the top of which, of course, is the highest high, but most of the other highs are clustered in a little price range. Right now, resistance zone, the yellow zone I got for resistance. So the support, we're stuck in the middle, but the red bearish engulfing implies those lows aren't going to hold. And we're going to go down probably to at least 32.13-ish, 32.09, and I wouldn't be surprised if some of these other support areas I'll drag to the right wouldn't be challenged. Next, maybe a head and shoulder top, but it's lopsided in silver. That would be the first shoulder high, and I'll make markings around it next week. 6/8 June 18th was the date. Obviously, the highest high is important, July 23, and the last shoulder high could have been a few days ago, and we haven't dropped off much since. Only if it can go sideways to lower from here would this story look feasible. But I don't like the lack of symmetry, and that's about it. Otherwise, the neckline slants up across the bottoms here. That looks reasonable. I suppose I'll draw it in right now. Why wait? Yeah, it's going to be off that low because it's a little bit better angle. And drop it right like that. Okay, good. So if we stay above the neckline for the next couple of weeks, approximately, timing, well, we'll see. Next, platinum. Bearish engulfing today. Implication down. Can't tell how far for how long, but resistance above the market stopped the rally. Now it's time for support to hold, and I don't think it's gonna. So the first thing of importance to break below is 1307. If it stays there in particular and goes lower, then the next stopping point might be 1270 and a half. But better support, longer term, would be around 1250. Those are my numbers. I think they're going to get hit. Next. Copper hasn't done anything since it crashed. There's no bounce here of any significance. Resistance has stopped it, including today, even though it's a little bit higher close. All I can say is I'm looking for lower levels, and maybe there's a rally, but you would obviously have a breakout first and then pop up to the highest high second, and that's the one after the big crash day, July 31st. Then you probably had some good follow through, but nah, not going to happen. We got a great buy signal in soybeans a couple of days ago, August 11th. It shot up for 2 days very substantially. And all of a sudden, yesterday, we have a bearish engulfing ER sell signal. Now, today, we did climb up well into that range of yesterday, but the high today was nowhere near Thursday's high. So the effect of the bearish engulfing is theoretically still in effect. Therefore, consider this possibility. If you went short here, believing it was going to work and come true, you would have a bigger profit than I would. And if you use the same stop, your risk factor would be significantly smaller. Well, I really can't say that because mine moves very quickly automatically. I just don't show you guys that. That's for both ER1 scalp and ER1 overnight and ER3 as well, which I don't talk about very often. It's ER1 scalp that's fantastic. All right, so I'm still bearish. I think today's low is going to get broken on a closing basis probably early next week, and if I'm wrong, that's my risk factor maximum. Just could be out on Monday. Can't tell yet. Got to believe my signals. Next chart. Slight new low, oversold, strong close, but no breakouts, no big signal. Interesting. It's one of the lowest closes this week, even though there was a good bounce. The only thing interesting about this is it did bounce right out of a support area, including yesterday's close being basically at the top of the support area. I don't know, could bounce a little bit more. Remember, oversold and support. Next chart is overbought, coming down. Soybean meal. Can't come up with anything bullish on this. We've got lower highs, lower lows over a long period of time, and a relatively classic stair-step bear market. And this could very well be the top of the step. And we're on our way to new lows. Overbought, could have turned around anywhere in here. Looking for lower lows. Green bullish engulfing yesterday and a very nice rally today in corn. Yay, off to a good start. I'm looking for at least where the cursor is right now at 391.75, but that doesn't mean too much. You really have to pop up here to that gap. That would be great at 417. I've been talking about that, I think, every day since it happened, almost every day. So this is the beginning of that rally to close that gap, possibly. Wouldn't doubt it. Next, we're looking at nothing much. Looks like a doji inside trading range, a little higher close. What can I say? I haven't got much faith in wheat. Lower lows, little bounces, bigger breaks. Trend is down, not oversold at the moment. Next, we've got Shell, the stock, not breaking out of any of its trading range that's been established here. End up going sideways. We need a close below 71.11, and it'll drop a lot more. And if it closes above, okay, I'll have to say 73.80, it'll go up a lot more. Right now, you're rocking a hard spot. Next, no new highs the last 3 days, overbought conditions, and you're around the top of a resistance area. I think it's about to dip down. Today's low is a new low since Wednesday. No big deal. Didn't even close below yesterday's low. So I think it started to turn down. You can't tell for sure. No reversal, which we still could have. Pops up a bit, makes it another new high, and all of a sudden crashes in one day in a bearish engulfing. That would be great. I do look for that, but I can't really tell you that's going to happen. I would love it. Next, we've got a little breakout to the upside from a pennant formation in Tesla. It is barely holding on. It closed right smack at that bear trend line across the top of the pennant, dipped into the pennant a little bit, and bounced off of a little horizontal support level. So, closing on the line doesn't give you any bullish or bear. It's a neutral. It has to hold here on a closing basis and start to work higher, or we're probably going to drop right back into this pennant, break out to the downside, and go down she goes, closing old gaps at around 240. That would be a pretty good downside breakout. The bullish one fails. It was almost failing at this point, almost. Not yet. Next, we got it dipping back down in NVIDIA. Slight new lows. Doesn't look like anything's turning out to be bad, but I've got to point out that this is the first time that we've traded 100% below the previous bull trend line, which is now, as of today, broken on a closing basis also. So all the range was below it. Close was in the middle of the range, and it's still below the line. And that kind of trend line break could help this to start the trend lower. We did not get any kind of overbought, and we did not get any kind of bearish, except the first high. But that was violated a couple of weeks later, slightly, but it did. These reversals that I've said before many times are not necessarily the lowest low like we got on that one, the highest high we got on that one. And that one was almost the lowest low for that rally, blah, blah, blah. These didn't work. Those two didn't go down. 3. Part of it topping out. Price range, not always the highest high or lowest low. Back to the mini. You guys have a great weekend, and thank you. If you want the special report on the October lows, good history, graphics, email info@ersignals.com. Profitable trading to you.